Should you invest in stocks or mutual funds? This is one of the biggest questions for investors, at least when they are starting out. Some people say stocks give higher returns, while others believe mutual funds are safer and better for beginners. But what is the real difference and which one is right for you? By the end of this video, you will have complete clarity on which option suits you best, based on your risk appetite, investment goals, and experience level. So do watch the video till the end before deciding which one is better. Let's first quickly understand what stocks and mutual funds actually are. Stocks represent ownership in a company. When you buy a stock, you become a part owner of that company. If the company does well, the stock price increases and you make money. Whereas if it performs poorly, the stock prices falls and you lose money. It's like if you had invested in Reliance 20 years ago. At that time, it was just another growing company. But those who held on to their shares saw massive returns over the years. On the other hand, if someone had invested in some random company without even understanding it properly during its peak, thinking it would continue growing, they would have faced huge losses. So with stocks, the potential for returns is high. At the same time, risk is also higher. Now let's talk about mutual funds. A mutual fund is like a basket of investments. Instead of investing in just one company, a mutual fund pools money from multiple investors and invests in diversified portfolio of stocks, bonds, or other assets. A professional fund manager takes care of buying and selling stocks or securities on your behalf. Think of it as if you go to a buffet, you get a variety of dishes on your plate instead of ordering just one item. Even if you don't like one or two dishes, you still have other good options. Mutual funds work similarly by spreading your money across multiple stocks, reducing overall risk. Now that you understand both stocks and mutual funds, let's compare them based on some key factors. First factor is control over investment. When you invest in stocks, you have full control. You decide which stock to buy and when to sell it and how to manage your portfolio. But this also means you need to actively track the markets, analyze companies, and make informed decisions. With mutual funds, this responsibility shifts to a fund manager. They make the buying and selling decisions for you. You just invest and let them handle the rest. This makes mutual funds ideal for people who don't have the time or knowledge to track the stock markets daily. Second factor is risk and returns. Stocks have the potential for very high returns, but they come with equally higher risk. If you invest in the right stocks, you can build massive wealth. But if you pick the wrong ones, your losses can be severe as well. Mutual funds, on the other hand, reduce risk through diversification. Even if a few stocks in a mutual fund portfolio perform badly, others in the fund can balance out the losses. This makes mutual funds a more stable option, especially for beginners. Third factor is time and effort required. Investing in stocks requires effort. You need to research companies, track market trends, read financial reports, and stay updated. If you love analyzing businesses and have the patience to study market trends, stocks might be a great option for you. Whereas mutual funds are more passive. You invest once and let the fund manager do the work for you. This makes them perfect for people who want to grow their wealth without actively managing investments. Fourth factor is costs involved when buying stocks. The only costs involved are brokerage fees and government charges. However, in mutual funds, there is an expense ratio as well. This is a small percentage of your investment that goes towards managing the fund. While this fee is not very high, it does slightly impact overall returns over time. Now the next question is stocks or mutual fund. Which one should you choose? If you are just starting out, don't have much knowledge about how the markets function, and prefer a hassle-free investment, mutual funds are a great option. They provide diversification and are well managed by experts, which helps you build wealth steadily over time. On the other hand, if you enjoy researching businesses, analyzing financials, and making independent decisions, then investing in stocks could be the right path for you. The potential for higher returns is there, but so is the risk. A good strategy is to combine both. You can start with mutual funds to build a solid base while slowly learning about stocks. As you gain confidence and knowledge, you can start investing in individual individual stocks to enhance your returns. At the end of the day, there is no one size fits all. Both stocks and mutual funds can help you achieve financial growth. It all depends on your risk appetite, time commitment, and knowledge. Tell me in the comments section down below, where are you investing in stocks, mutual funds, or both? Also, don't forget to like this video and subscribe to my channel for more personal finance and investment related content. With that said, I will see you in the next one. Thank you so much.